PB Taxand Tax Updates. Disclaimer: the following information is intended only to be a guide. It must not be relied on in or applied to specific situations without previously seeking proper professional advice.
Amendments to transfer pricing provisions in accordance with Minister of Finance Regulation Number 172, Year 2023. The Indonesian government has updated provisions in connection with transfer pricing through the issuance of Minister of Finance Regulation Number 172, Year 2023 regarding the application of the arm's length principle on transactions affected by special relationships. MOF Regulation 172 revokes 3 previously issued Minister of Finance regulations related to transfer pricing and consolidates them into one regulation. The new main arrangements set in MOF Regulation 172 are as follows. 1. Arm's Length Principle, or ALP. The application of ALP, which was previously regulated in Minister of Finance Regulation Number 213 PMK.03 of 2016, that is limited to the scope of transactions involving special relationships, has been expanded into transactions affected by special relationships, specifically in transactions that include related party transactions and/or transactions carried out between parties which do not have a special relationship but has their counterparty and transaction price determined by a related party to either one or to both parties. Thus, taxpayers are required to apply the ALP to determine the arm's length transfer price in transactions affected by such special relationships. 2. Corresponding adjustment for domestic transfer pricing. MOF Regulation 172 complements the provisions related to corresponding adjustment for domestic transfer pricing. Corresponding adjustment is the adjustment of transfer pricing materials in the calculation of the taxable income of a domestic payer, who is a counterparty to a domestic taxpayer whose transfer pricing is determined by the Directorate General of Taxes, or DGT, or a foreign taxpayer whose transfer pricing correction is made by the tax authority of a tax treaty partner country. Corresponding adjustment can be applied if the domestic taxpayer whose transfer pricing is determined by the DGT agrees to the transfer pricing determination and does not file legal action against the tax assessment letter on the transfer pricing material determined by the DGT. Corresponding adjustment is implemented through the following mechanisms. A. Correction of annual income tax returns, given that no audit has been conducted. B. Disclosure of inaccuracies if an audit is being conducted. Or C. Correction of tax assessment letters if a tax assessment letter has been issued and no legal action has been taken against the corresponding adjustment material. 3. Secondary adjustment. Secondary adjustment arises when there is a tax assessment letter or correction of tax returns due to the DGT's reassessment of transfer pricing in cases where the taxpayers do not apply the ALP, apply the ALP but do not comply with the provisions, fail to prove compliance with preliminary steps, or determine transfer prices that do not fulfill the ALP. If a difference is found between the value of transactions affected by special relationships that do not comply with the ALP and the value of transactions that comply with the ALP, then the difference is considered as an indirect profit distribution to the related party, which is then treated as dividends and is subject to income tax. However, secondary adjustment does not apply if there is an addition and/or refund of cash or cash equivalents equal to the difference conducted before the issuance of the tax assessment letter and/or the taxpayer agrees to the DGT's transfer pricing determination. 4. Adjustment of selling price to calculate VAT payable. The DGT is authorized to adjust the selling price or compensation affected by the special relationships as the basis for calculating the VAT payable, which is based on the fair market price at the time of delivery of taxable goods and/or services, in the event that the selling price or compensation is lower than the fair market price. Adjustment of selling prices or substitutes can also be made if there is a transfer pricing determination by the DGT, or primary adjustment, that can be allocated to each delivery of goods and/or services. However, adjustments to selling prices or substitutes to taxable entrepreneurs as sellers or service providers do not result in adjustments to input tax for the taxable entrepreneurs as buyers or service recipients. 5. Transfer pricing documentation. Transfer pricing documentation must be submitted by no later than 1 month after a request is submitted, in the context of supervision or examination. In addition, there is a change in the provisions in determining the threshold of preparing country-by-country reports or CBCR, whereas in the previous regulation, a CBCR is prepared if the taxpayer has reached a consolidated gross turnover of at least 11 trillion Indonesian rupiah in the fiscal year concerned. However, according to MOF Regulation 172, the CBCR obligation is determined based on a consolidated gross turnover of at least 11 trillion Indonesian rupiah in the fiscal year prior to the reported year. 6. Multilateral Agreement Procedure, or MAP. MOF Regulation 172 regulates the provisions regarding the Multilateral Agreement Procedure Decision Letter, which is a decision letter issued to follow up on the agreement in a multilateral agreement. A Multilateral Agreement Procedure Decision Letter becomes the basis for tax refund or collection and is used to calculate the amount of tax in the tax collection letter. 7. Advanced Pricing Agreement, or APA. There are additional provisions regarding multilateral APA, specifically on the transfer pricing agreement between the DGT and more than one competent authority of a tax treaty partner that is carried out upon the request of domestic taxpayers. MOF Regulation 172 also regulates the elimination of administrative sanctions in a tax collection letter arising from the retrospective application or rollback of an implemented APA, particularly the application of the agreement results in the APA for the fiscal years prior to the APA period. For taxpayers involved in special relationship transactions and/or transactions affected by special relationships, it is very important to be aware of the changes in the provisions of MOF Regulation 172, which were put into effect on December 29, 2023.
Thank you for listening to PB Taxand Tax Updates.